Well, folks, this kind of sucks. So let's just put it that way. Want to run you through and take you through some important things I'm looking at here. Now, I don't see a way this ends good, so I think it's important I show you guys this. Now, I don't know how many folks watching this it affects. I think it affects a lot of other people a lot more. Let's just put it that way. So yeah, got a lot to go through in today's video. I just want to get straight in this, guys. I appreciate you joining me, taking the time out of your day to watch this one, and thank you for being subscribed, okay? So first place I want to start out here is Google Trends. This goes all the way back since the beginning of Google Trends, and tracking Google search data around a specific search term, how to buy stocks, okay? Now, this specific search term went the highest we've ever seen in the second half of 2020 into the beginning of 2021. And it went there because everybody was kind of forced to be home. People had a lot of extra money around. There was stimulus. There was all that stuff going on, right? And so a lot of people wanted to try out the stock market at the end of 2020 and certainly the beginning of 2021. So a lot of people were getting involved in all those sorts of things, right? Now, we know that, right? And we've never seen that level of people wanting to get in the stock market really ever in history. It was crazier than the tech bubble, actually, much crazier than the tech bubble in terms of how many people wanted to get in regards to the market, right? From basically the second half of 2020 through the beginning of 2021. Now, what happened after that was no one wants to get in the stock market event, essentially, okay? All the way back in December, even with every growth stock in the world given to you for, pennies on the dollar, all of a sudden no one wants to even bother about like how to research stocks, how to buy stocks, how to get in the market, anything like that, right? And the reason this happened, in my opinion, actually is not as much around, it is part to do with people being scared, concerned, maybe people that had been in the market got, thrown out of the market, those sorts of things, right? But it actually has much more to do with the next chart I'm about to show you. And this is what matters more than anything, okay? And this explains why we had 2020 and why we had 2021 and why we're at where we're at in 2023. The chart I'm showing you right now. This is what we call real wages, okay? And if you really want to know how the average person's doing out there, always look to real wages. Real wages will tell you more than any other indicator, in my personal opinion, you could possibly look at from the macroeconomic landscape. Now, we had an interesting phenomenon that happened for about a 5+ year time frame, okay? From basically 2015 through about, until Rona, essentially, we had real wages absolutely skyrocket in the United States of America that we hadn't seen in a long, long time, right? Coming out of the Great Recession, we certainly had real wages start to catch up a little bit, but it was slow because companies weren't needing to pay workers much at that particular time, right? By the time you get to 2015, unemployment rate was starting to get pretty dang low, and finally companies had to start paying up. Now, we also had simultaneously inflation, which inflation plays a huge part in real wages, right? If workers in general are getting a 5% wage bump, but inflation's 10%, real wages are going down, okay? And so that's why real wages matter so significantly. Now, the problem is, in 2020, 2021, people had been through real wages bump in a huge, massive way, right? Real estate prices had obviously skyrocketed, and there was a lot of excess money around, right? And so a lot of people, when they have excess money around, they're like, what do I do with all this extra money? Let me invest it. How do I buy Bitcoin? How do I buy stocks? Like, how do I do these sorts of things, right? If you have no extra money, you don't care about the stock market. You don't care about Bitcoin. You don't care about buying real estate. You don't care about any of that because you got, barely enough money to get your groceries or whatever, right? So we had real wages go down and down and down and down for a long time. Now, very recently, real wages have started to tick up a little bit, but keep in mind, it's a little bit, not a lot. I mean, like so minimal that you can barely even feel the effects of that, okay? So the bottom line is, when you see this term go down, you've got to understand it's really gone down not just because of people being fearful or anything like that. It's gone down because the average person's been hurt so bad financially really the past few years, despite the employment picture being about as good as you can get with unemployment in the threes. Everything's gone up so much. Their wages just haven't been able to keep up with that, right? I take you back to when I used to work at Quick Trip, right? When I used to work at Quick Trip, I was making, $50K a year, whatever. And I've always kept my expenses lower than my income. So I was always in a position to buy stocks every single month, if not every single 2 weeks. Always. Even back when I worked at Walgreens and working minimum wage jobs, always had more income than expenses, right? So I was always in a position to buy stocks. And the problem is, in 2020, we had so many people that had benefited from real wages going up in such a significant manner for years, and then you add on crazy amounts of stimulus and crazy amounts of time on their hands, and everybody and their grandma wanted to get in the market, right? Now, this matters significantly, what I'm showing you now, because now I'm taking you back in history, and this will explain the story a little deeper, okay? This is that same exact term, how to buy stocks, right? And this term peaked around kind of like '07 time. Now, keep in mind, real wages had helped people out for many, many years, kind of, from basically 2003 to onward, right? And so that term peaks around there. And then for years, basically that term goes down until it finally bottoms out at the beginning of 2012, right? Why did that keep going down? Well, were people in a great financial position during those years? No. Everybody was fearful. You had the great financial crisis happen. People were worried about their jobs, their incomes, their homes, if they were able to keep their homes. We had foreclosures and short sales skyrocket to the biggest numbers we've ever seen in history. So the last thing that was really on a lot of folks' minds were, how to buy stocks. How am I going to invest in the stock market? How am I going to do this, right? It's just, when you're going through that sort of financial damage, you're not going to think about that. Now, when did it finally start to come back? Well, finally, in 2014, we finally eclipsed where we were at basically back in kind of the '07 time frame in terms of how to buy stocks, right? So it took years to kind of get back to that place. Now, the problem with this is, and such a significant problem, is people missed out on all the dang money. They missed out on so much money, right? I mean, this was kind of during that time period of, very few people wanting to even find out about the stock market, how I buy stocks, stock market for beginners, any of that stuff. And look what happened with stocks during that time period. Amazon went up 700%. Apple stock went up 470%. Google McDougal stock went up nearly 400%. The NASDAQ in general went up 152%. And just people, unfortunately, missed it, right? They completely missed it. And this almost shows you kind of like last year when you had growth stock platter out there of everything you could ever want for any price, and people missed it, unfortunately. And they're going to miss it again. And so if we look at like last year, right, I was able to take advantage of those deals. It goes back to more income than expenses, the same thing I've been doing since '08, '09, right? And so I was able to pick up Tesla shares at $106, at $124. I mean, that's insane, right? Able to pick up these Meta shares at all these disgusting prices. Like, give me a break. So look at this. Somebody sold me 62 Meta shares at $88.94. Like, come on, man. Somebody sold me 650 shares in Meta stock at $93.12. Those shares today are sitting on a $133,000 gain. $133,000. That wasn't even a year ago. Just those lots there. That's insane, right? If I think about Palantir, I mean, my gosh, did they trade that one down last year, right? And some people were able to take advantage of it, the folks that had more income than expenses and all those sorts of things, but some people just weren't, right? Elf on a shelf. This was an extraordinary opportunity back in 2019. Holy smokes. But that was coming off of the very rough market we had in 2018, right? And so when it comes to these sorts of situations, I can take advantage of these deals because I know what I'm doing. On top of that, I'm not scared. On top of that, I have more income than expenses. And it's been like that for 15 years now. 15 years. The problem is most people can't do that, right? They are either scared or they don't know what they're doing in the market. They have no clue what they're looking at. They just, most people don't even know like what an income statement is. Like, come on, man. By the way, everybody should know an income statement regardless if you're in the stock market or not. Like, balance sheet, like that's your own life. Like, come on, man. More income than expenses. Put in the work. Don't be scared. Know what you're doing, right? Now, here's a bigger problem, a much bigger problem, okay? There's only two ways this is going to end, and both of them are bad. I mean, both of them are absolutely horrible for most folks in the situation of like not being able to take advantage of deals in the market. And here's why. One is we have a recession risk that's out there. Now, this is not even the worst thing that could happen. A recession in 2024 is the better of these two evils. And one of these two evils is going to play out. This is the better scenario, is a recession in 24. Now, here's the problem with the recession in 24. Guess what? A lot of people be scared. Everybody's talking about recession. Oh boy. It's going to take years for people to get back into the market, right? That's just what happens over time. And a lot of people will be fearful of their jobs, of their home prices, of everything if we actually have a recession, right? And so that's not a good situation. That will take years to come back in terms of people wanting to get in the market, research stocks, and start buying stocks again and those sorts of things. Like, that's not a good scenario. But that's the better scenario. The better scenario. The much worse scenario, folks, is this. This is a much worse scenario. The talk about there's not going to be a recession in 24, right? Goldman Sachs is all the way down to 15% belief that there's going to be a recession in the next 12 months. This is a worse scenario if we don't have a recession in 2024, okay? And let me explain why, okay? So let's say we don't have a recession, and let's say real wages start to tick up, right? You got to understand, with how bad people have been beaten down with real wages over the past few years, it's going to take them several years of real wages being in a good place to get back involved. So even if we don't have a recession in 24, it's not like people are going to be running back out to learn how to invest, to figure out how to buy stocks and all sorts of things. It's not magically flipping overnight, right? If we don't have a recession, we also have inflation risk out there as well, right? Which is something we've been dealing with and we really don't want to deal with anymore, but it's something we had to deal with. If you look at consumer sentiment, we basically bottomed kind of around summertime 2022 at the worst consumer sentiment we've ever seen, okay? Now let's imagine a scenario for a moment where consumer sentiment continues to pick up, real wages continue to pick up, let's say over the next year and a half, all right? That's going to be a bad situation because that likely will mean people will start probably entering the stock market again in what year? They'll start likely entering the stock market again and trying to get into stocks again around 2025 or 2026, okay? Because remember, real wages have to go in a great place for a while. It's not like magically overnight it happens, right? And consumer sentiment has a long way still to come back. So if we're talking about real wages finally get to a good place, consumer sentiment gets to a good place, I can tell you it's not going to be until 2025 or 2026 until people, in that scenario, until people start to enter the market again. What do you think stocks are going to be priced at then? Well, if we don't have any sort of real recession, stocks are going to be priced massively higher than they are now. And I mean massively higher, okay? And this puts a whole other risk out there of maybe people are entering the market at a very, very poor time. And then that will be the moment in which, 2025, 2026, you have to actually be very fearful, right? And it was very similar to kind of like the tech bubble, where in the tech bubble, stocks fell considerably. Obviously, it started in 2000 into 2001, 2002, right? Which is kind of similar to what we had in the most recent crash, which was stocks started to weaken at the very end of 2021 and then fell massively in 2022. And we still got some stocks that aren't even bottoming yet. A lot of the dividend stocks are still trying to find their bottoms. So we've gone through our own kind of like market bubble-ish type thing, we can call it, right? And we could be climbing out. But here's the thing. If you were buying stocks in that time, great. But then by the time a lot of people were looking up stocks again, it wasn't until 2007, right? It was years later, right before the great financial crisis, which could be another one of these scenarios where people are getting in the market in a big way. Let's say 2026, everybody wants to start looking at stocks, and then you have some sort of problematic situation that comes in 2027, 2028 that we have a massive, epic crash in the economy, in the market, and everything in general, right? That's a scarier scenario, in my opinion. Much scarier than a recession. If we get the recession out of the way in 24, I think it would be best case scenario. Have a recession in 24, have unemployment climb to 5, 6, 7, 8%, whatever. Get it out of the way, get it done with. Don't kick this can down the road any further. You kick that can down the road, I think there's a whole new set of risk out there. And by the time people are going to get back in the market, they're going to get absolutely wrecked likely, okay? I don't know if you guys have seen this before, this farmer did this back in the 1800s, and it's been pretty accurate over time, I got to say, okay? And basically what this looks at, it's a fascinating thing to kind of look at, right? It's basically, A is kind of like years that like panics have occurred, right? B's are years of good times, high prices, and it's a time to sell stocks, right? And C is like a great time to be a buyer of stocks, right? And so even recently, like certainly, 2023 has been an exceptional time to be a buyer of stocks. There's no doubt about that, right? I mean, look where stocks started this year. I mean, absolutely incredible, right? Obviously, even at the end of 2022, like ridiculous, right? And so you could make an argument, especially if we don't have a recession in 24, like, man, it is actually a great time to buy stocks, right? And it's fascinating because you look at this and it says basically you should be a seller of stocks in 2026, right? Which would be a fascinating thing because that's probably when like people are probably piling back in the market again, based upon if real wages keep going up, we don't have the recession, and all those sorts of things. That's probably going to be right when people are piling back in the market, right? Which sets us up into an interesting situation because this chart doesn't have us being a good buy time again until 2032. So that would be, let's say 2027, 2028, 2029, 2030. Like that would be a little rough time. Let's hope that's not accurate. But it's actually, you can pause the video. It's actually been fairly accurate over time, which is a little scary, right? But gosh, could we have a situation like that? It's always possible. Now, there's a few things you can do so you prevent from being into this type of situations that everybody else is into, which everybody else is into these situations where they all pile in the market when everything's peak good in terms of real wages, peak good in terms of sentiment and everything like that, right? And avoid this whole scenario. And you can do that through pretty much three main ways, okay? One way is you've got to always have more income than expenses. This is absolutely vitally key. You've got to have more income than expenses. If you do not have more income than expenses, you need to work your butt off to figure out what can you do to have more income than expenses. Sometimes it's cutting on expenses, right? Especially if they're not things that bring you any extra income, right? Like I'll never cut back on an expense if it brings me more money, if it helps me for investment research. Like if there's, I pay for so many different stock market related services. Why do I pay for all these stock market services? Because they're going to make me a ton of money. So it makes sense to spend money on that. Where do I try not to spend like a ton of money, right? It's on like frivolous, materialistic things that aren't going to add much to my life, right? I've been through that. I bought, $12,000 watches before. It's stupid. And I got nothing out of it. I didn't feel any better about myself. My self-esteem did not go up. It was dumb. I bought those stupid things, okay? I bought a Model S Plaid. The thing's fast. It is fun, but it's still a stupid expense. Like I should have bought something else instead that could have been good, right? And so where do I funnel my money? Real estate and stocks. Real estate and stocks. Real estate and stocks. I haven't spent more than $10,000 on something since probably 2021. Since 2021, okay? Other than stocks and real estate. Like that's where I like to spend my money. So you got to have more income than expenses. And I've had more income than expenses since I work minimum wage jobs. If I had more income than expenses, you can figure it out, man. Maybe it's a side income stream. Maybe it's a second job. Maybe it's cutting down expenses that are stupid. I guarantee you, if I was to go through everybody's expenses, they got so many dumb expenses in there that it's not bringing them any value in their life. It's not helping them make more money or helping them be more successful of an investor. It's just silly stuff that if they cut that back, they'd actually find, oh my gosh, my life is better because of this, right? A lot of people spend money on drinking all the time, right? Love to go to the bar, love to go to a club, whatever. They spend all this money on all this alcohol. It doesn't bring you any happiness. All it is more misery over time. Don't you know? Like it's a depressant. Like alcohol is literally a depressant. My gosh, I could go so deep on some of these subjects, right? Second thing you can do, dollar cost averaging, right? Which if you're an index fund investor, it's just investing more in index fund all the time. If you're a stock picker like myself and I'm building out great portfolios, right, that are absolute beasts and just you can't compete with those portfolios, I buy stocks every week. Even go back to Quick Trip. I pretty much bought stocks every 2 weeks because at Quick Trip, if I recall, we got paid, was it weekly or was it every 2 weeks? From what I remember, I would invest in stocks like usually 2 times a month when I was working at Quick Trip, maybe 3 times a month if it was like a bonus, a really sweet bonus check or something I got, because I was a manager for Quick Trip. So gotta always be in a situation when you're buying consistently in the market. Every week, I'm buying in the public account. Every week I'm buying in the dividend account. Every week I'm buying in the Patreon portfolio. Every single week, right? You've got to be in that sort of position where you're buying every single week because what happens to folks is they stop buying, they don't get as interested in the market, then they start, that extra money they start spending on stupid stuff. They go buy another car and next thing you know, they got $1,000 payment on that car. And now that $1,000 payment is taking the $1,000 each month that they could be investing, and they'd rather have this fancy car over here. Like, come on, man. Like, come on. Like, what are we trying to go for here, right? The money today or a lot more money tomorrow, right? Like, the whole game you got to understand when it comes to the money game is it's all about, like, if you make the right decisions over a 10 to 15 year span, you're going to have so much money that anything materialistic you were thinking of buying in the past is going to be a joke compared to what you can buy for yourself in the future. Let that sink in for a moment. Whatever you're thinking about is a cool purchase now. You play your cards right over this next 10, 15 years. You're going to look back at what you were thinking about buying and be like, that was so much of a joke, because what I can afford now is so much further than whatever that thing was. That you're just going to sit back and laugh. Because I know I sit back and laugh about things that I was thinking about buying 10 years ago, 12 years ago, 15 years ago. And I'm just like, thank goodness I didn't do that, because it was just such a silly expense that just would have made no sense at all and would have just held me back in such a crazy big way. Like, oh my gosh, okay? And that's all you do. Like, when you reach certain levels, you just sit back and laugh. That's all you can do, right? And the third thing you got to do is work hard. Like, you got to always be working hard for making sure your income and expenses are right, but also making sure you're always looking into companies. There's so many opportunities in the company. There's stocks in the stock market right now that are going to 10x over the next 5 years. And there's a lot of them. Are you going to find those stocks? Because they're out there. There's stocks that are going to 100x over the next 10 years. There's stocks that are going to go up 50x over the next 10 years. There's stocks that are going to 5x over the next 10 years. A lot of those. There's a lot of stocks that are going to 3x and 2x. They're all over the place. And that's where the hard work comes in, and putting in the time to research these companies, right? And the more success you have, the easier the work is to put in, because you know it's there. I understand for somebody just getting in the market that works hard because you haven't had this level of success. As somebody that's had so much damn success, like, I'm just telling you, it's worth it. It's worth it, okay? It's worth it. There's a reason why I'm happy to listen to a conference call at midnight if I'm going to listen to a conference call at midnight, because I know the success is there. And any problems I have to go through to get there is so minuscule. It's so small compared to the level of success and what you gain from that, folks. So, don't fall into those categories, because that sucks. Because the masses, they pile in at the worst times. They pile out at the worst times. Then they're not interested for a long time, while, great companies do great things and go beast mode. And then they all pile back in at the worst time and get slaughtered again. It's like a never-ending cycle. It sucks, man. I wish it wouldn't be that way, but it is that way. And I don't really see any way it's not going to be that way anytime soon, to be quite honest with you guys, okay? So, appreciate you guys joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. I appreciate y'all. Hope you enjoyed today's video. If you did, let me know in the comments section. Also, pin comment down there, free workshop, how I find 10x stocks. That's going to be a helpful one for a lot of you guys out there. Definitely check that out. That will be pinned comment. Much love, and have a great day.